like all generations of students, my generation were idealistic. We knew there was bad in the world. We knew there was greed, exploitation, corruption, but we also knew we could do better than our parents' generation. That was 30 years ago that I graduated university, and as I reflected on at my 50th birthday of how it all seemed to have gone so wrong, frankly, we've seen some remarkable trends. Do you know that in the US today, the top 1% of the population owns 40% of the national wealth? According to some studies, the average chief executive officer of corporations earns 350 times that of the average worker. That's up from like 50 times in the 1970s. The pay of laborers, workers, us, hasn't even kept up with economic growth. It's grown at rates well below economic growth, while corporate profits have captured the lion's share and gone up exponentially. So you can see there's unfairness in the world. Some of you may have heard the recent story, the very recent story, in fact, it was only last week, of a US hedge fund manager who admitted to systematically trading on inside information, breaking the law, and violating public securities markets. Okay? He paid a fine of $1.2 billion, and his firm was shut down. As a result of paying that fine, he dropped from being the 43rd richest American to being the 59th richest US American. So let's add some injustice. Let's add some injustice to the unfairness. And you start understanding why the 99% are getting a bit cheesed off, right? And it doesn't take a lot of imagination to see a backlash brewing. In the future, we must either see higher tax rates and more regulation, or possibly a rolling series of workers' revolutions, which will be very disruptive for everybody. So something's gotten out of balance. And my generation has evidently spent the last 30 years in some greed-induced frenzy because it was all about the money. And yet I know we were well-meaning individuals. We intended well. Somehow, systems and organizations aren't well-meaning, and we got subsumed into that. My industry, the financial services industry, gave us the great financial crisis and the recession we've been living with since 2008. In a recent study by the CFA Institute, they found that investors polled, only 52% of the investors said they trust their asset manager to do the right thing with their money. 52%. Now, do you understand your asset manager is the person you entrust your money to look after it for you? 52%. This is outrageous. Something's gone amiss. Anyway, I'm an investment manager. Okay? Maybe I can reach more than 52% of you today. And I guess my message here today is twofold. First, there are an awful lot of people in the financial service business who are diligent and ethical and do the right thing. And yeah, and then there are those that fell off the deep end, many of them. But the key message is this. You can invest both profitably and responsibly. You can align your humanity with your investments. And I want to give you some examples of that. By the late 1990s, this evangelical church in Soweto, the Grace Bible Church, had spent about 10 years building up their congregation and their tithes. They'd been meeting originally under trees and in fields, and later in rented accommodation, and they were ready to move into their own church. They'd found a piece of land that they purchased. They had architectural drawings. They had a contractor lined up to build it. They had the municipal approvals. And they'd saved half the money they needed to build this new building. So they went to their bank and they said, please, can you lend me half the money so I can build the building? We've got tithes, it's working. What did the bank say? I can't see you, but you're saying, right. The bank said, no, not interested. That bank was quite happy to pull deposits out of Soweto, but not put money back into Soweto. They went to all the banks in the country. They got substantially the same answer. And they found us, my team, and we looked at it. And we saw a business model, management, predictable cash flows. Well, that's the foundation of any good investment, by the way. And we made a simple mortgage bond on commercial terms at commercial rates. And they, of course, paid it back early. And they went on to build a phase 2. This is the inside of the church. They went on to build a phase 2, which includes a community center with classrooms, a computer lab, and a gymnasium. At the time, we lent them the money for that as well. At the time, we tried to entice Richard Branson to build his Soweto gym there. We thought they might call it the Holy Virgin Active. Anyway, they weren't ready for that. Anyway, a true community center funded with people's pension fund money. This is not far removed from you. This is your pension fund investors. So in the 20 years after South Africa's transition to democracy, we've had the pleasure of mobilizing people's pension fund savings into various forms of developmental investing. Roads, water, transport, houses, electrification, hospitals, et cetera, and many more. And it's been an exciting time. But let's go back to first principles. Remember, we're fiduciaries for other people's money. We have no right to give away that money or to accept lower returns than we should get for the risk we're taking. It's people's pension funds. And looking after their pension funds and earn the right returns is a sacred mission unto itself. It's an adequate mission before we even discuss social impact. But those same investors that gave us the money to manage said, sure, invest well, but go out and find things that are developmental, beneficial for the society we live in, because we can't be an island of prosperity in a sea of despair. And we've done that. And so through the years, those investors have gotten quite used to accolades for the developments of these investments they're making, winning various awards with publications and organizations. But they also understood that sustainability and profitability are two sides of the same coin. They want to do good and they want to do well. So the question is, are they also doing well in addition to doing good? The answer is yes, they are. Most recently, literally 2 months ago, this flagship infrastructure fund won the award using 10-year data for being the top-performing bond fund in the country. Amongst all bond funds, not just developmental stuff, all bond funds, the top-performing fund. So you see the investors are truly doing well also. So we heard a bit earlier about black economic empowerment, and it's a worthy cause and a necessary transition from apartheid to a world where the previously disadvantaged have an economic stake in the country. But when the flavor of the day was licensing new casinos, we saw many BEE groups looking for financing so they could buy shares in those casinos. So socially good, BEE, pension funds want to support that, or socially bad, casinos. Well, this to me is an easy one. You can't whitewash a bad social impact, but just because it's black-owned, has job creation, pays some taxes, and has corporate social investment strategies. Can't do it. We didn't do it. Likewise with tobacco. Didn't fund those black economic empowerment deals either. Judgment has to be exercised. It has to be exercised by somebody. And I'm not trying to disempower you. You should be thinking about who's exercising judgment on your behalf. Let me give you another example. We were approached a few years ago by a large chicken processor. They were looking to support the rollout of a series of owner-managed farms in rural areas to grow broiler chickens for their supply chain. So from a developmental point of view, it's rural development. Often they're black-owned, food production, import replacement, small enterprise development. Did I say job creation somewhere there? Fantastic stuff. Really exciting developmental investment. But blink and look again, and what if you're seeing part of the factory farming of animals? What if you're seeing an environment where in each 6-week growing cycle, each chicken house starts with 40,000-day-old chicks that are coached and cajoled into turning grain into protein, given antibiotics, slaughtered, pumped up with saline, and sold to us for dinner? Socially good, socially bad. Do you want it in your pension fund? The vegetarians have spoken. Okay? And I feel for that. And in mitigation, we did ask these questions. It so happens this is a side issue. The best way to get chickens to turn grain into protein is they must be happy. They must, no, I kid you not. I kid you not. They must be at peace. These guys work hard to keep it equanimous and calm and quiet. Only one worker is allowed in each chicken house in each growing cycle because he knows his chickens. So they have a very good life right up until, unfortunately. And we did ask about the antibiotics, and they're not overused, but okay, that's in mitigation. It's still a good question, and judgment must be exercised, and that's why when I say we, I don't mean I. There's a group of people who think about this fairly intensively, and we debate these issues. And we've been doing this for a long time, and we still have active debates about what's developmental and what's not developmental. So it's axiomatic that if you're going to do the good, houses, roads, you must avoid the bad, tobacco, alcohol. Somewhere in the middle, there's an area where we could do constructive engagement, where we can engage with companies about their practices. So in the case of the chicken farm, we engage with the processor about the antibiotics question, for example. This is the realm of engaging with the world as it is towards the goal of the world as it should be. And it's also part of being a responsible investor. The Church of England has shown some really great thought leadership in this area in the way they manage their own endowment and their own pension fund. Their Archbishop Welby, speaking of their investment policy, the socially responsible investment policy, said this: if you exclude any contact with anything that directly or indirectly at any point gets you anywhere bad, You can't do anything at all. And this is true, and it's very pragmatic. But let's go a step further. We can do the good, we can avoid the bad, but does there come a point where you have to speak out against the bad? Is there a duty to do that as well? It's not something one does comfortably because you can quickly get into the realm of politics, which is really not our realm. But we've recently done just that as regards the microlending industry. You get it already, right? You know, in the 1990s, when the South African microlending industry was just starting up, all there were loan sharks, feeding on the unbanked poor, the people the mainstream banks simply didn't want to do business with. We took the view that access to finance by consumers was vital for human development and national development. Education, housing, cars, small enterprise all need finance. Access to finance is truly necessary. And by 2001, Muhammad Yunus won the Nobel Prize for his work at Grameen Bank in Bangladesh funding small enterprises with microloans. And from then on, microfinance became the darling of the global investment community and the development finance institutions. Money poured in, and the businesses grew. Flash forward 10 years, and there's a microlender in every corner, right? There's aggressive incentivized salespeople on commission, selling loans to people. There's ads, there's banners, there's SMSs. In fact, this one just came literally, I joke not, yesterday, on the phone, all right? You all get them. You know, do you want a loan today, 150,000 Rand? Okay, so we're seeing aggressive sales techniques and we're being sold to people who have not the basic understanding of the proper use of debt for assets or for businesses, and who have no concept of compound interest, a theme echoing through today's discussions. But let's pause on compound interest. So Albert Einstein reportedly said that compound interest is the most powerful force in the universe. I'm sure he never said that, but he's been quoted 1,000 times. It doesn't matter. Take 1,000 Rand, invest it at 40%, which is probably a rough guess of what the rates are on microloans all in, and over 10 years it'll grow to 29,000 Rand. That's fantastic. If we could get those kind of investment returns for clients, we'd be deities. Try being on the paying side of that equation. All right? I'm taking some liberties here because they're not 10-year rolled-up loans, but the concept is the same. We're talking about debt that people will never escape from. And this is a global problem. Muhammad Yunus himself has recently said in his book, microcredit is supposed to support income-generated businesses aimed at uplifting the poor out of poverty. Microcredit was created to protect people from moneylenders, not to create more moneylenders. And so we switched sides, and we started speaking out publicly. We told the country that we would no longer be funding microfinanciers from our developmental portfolios. And as a consequence, there's been a backlash, a bit of anger, but certainly a lot of support. And there's a debate now going on and a discussion. The microlending industry is talking to each other finally and to their regulator because they're under pressure now. That money that was pouring in has stopped pouring in. The consumer can't take the strain. So if nothing else, we've rattled the cages and hopefully can create some positive change. Now look, I don't want to leave the impression that access to finance is something we dismiss. Today, as we stand here, there are lending schemes for taxi drivers to buy own vehicles. Everyone is small business. There's lending schemes for people to buy their own houses, low-income and affordable housing in South Africa with mortgage bonds. There's lending schemes so that students can continue on with their educations, and we're funding all of those with people's pension funds. So you can invest profitably and you can invest responsibly, and you could do it together. There's judgment, there's a little bit of complexity. You have to ask who's doing it. But I want to give you a couple of pointers. If you're a Muslim in South Africa, there's a well-developed range of Sharia unit trusts speaking specifically to your mores and aspirations. If you're a member of a pension fund, you can go to your pension fund trustees who work for you. You are, after all, their beneficiary and their boss. And you can ask them, what's the responsible investment policy of this fund? What are you doing for the country? If after shopping around you can't find a fund that speaks to you, that you feel you want to invest in, ask your financial services providers, whoever they may be. And what would happen if we all went to the supermarket and asked for free-range chicken? The demand would be noted, supply would increase, and there'd be more free-range chicken. Economics does work. You must ask. For years, I've been waiting for the consumer in South Africa to wake up and start asking these questions like they do in Europe and America, where the real socially responsible investment movement started. So there are many people in this industry, the financial service industry, that are good people, diligent, intelligent, well-meaning. And then there are the bad guys, the casino banksters, the rapacious microlenders, the financial product pushers, the asset managers who actually were more worried about their fee than their client outcome. But what I want to say is this: they could never have done that harm if the owners of the money had been paying attention to how the money was being invested, if they had asked the questions. It's a phrase on Wall Street, other people's money. It's a joke. It's your money that they're playing with. So I encourage you, my injunction to you, if you will, is to engage with your money, ask how it's managed, think about how it's deployed, and perhaps protect us from the future and make for a better future. Thank you.